We have a massive financial services market here. It's actually one of the largest ones in the world. And those larger players are the folks who are providing liquidity for the rest of the industry. They are the natural clients and acquirers of a lot of these fintech companies. As someone who writes about the industry a lot and now also is an investor in the industry, I see Canada actually as one of the most exciting places to be building in fintech in any market. And it's something that I don't think gets discussed too often.
Welcome back to Fintech Layer Cake, where we uncover secret recipes and practical insights from fintech leaders and experts. I'm your host, Reggie Young, Chief of Staff at Lithic. On today's episode, I chat with Tal Schwartz, the author behind the Canadian Fintech newsletter, which is Canada's biggest fintech publication. I've been tracking Tal in his newsletter for a few years now, and I think it's one of the best sources if you want to keep up with all things fintech in Canada. Lithic recently expanded our card issuing to Canada, so I was excited for this conversation. Tal and I cover how the US and Canadian fintech markets compare, current Canadian fintech trends, the Canadian sponsor bank market, and much, much more. Fintech Layer Cake is powered by the card issuing platform Lithic. We provide payments infrastructure that enables companies to offer their own card programs. Nothing in this podcast should be construed as legal or financial advice. Tal, welcome to Fintech Layer Cake. Excited for our conversation today. Why don't you start out by giving listeners a little bit about yourself and all the fun new recent announcements you've got going on?
Well, thanks for having me. So I'm Tal Schwartz, based in Toronto, and kind of spent my whole career in the Canadian fintech space. So the way I got into the industry, my first gig at McGill, I helped start this trade association called the CLA, the Canadian Lenders Association. At the time, it was a really small trade group for lending companies in the non-bank space. But over the next few years, it turned into the largest financial services organization in the country. Every bank's a member. There are hundreds of fintechs that are members. I did mostly policy and market research type stuff. So always did a lot of writing. Later, that kind of turned into this newsletter that I write, which is now the most popular fintech publication in the country. It goes out to about 12,000 people every week. And so I host lots of big conferences across the country, like the Bankers Summit and the Lenders Summit for a few thousand folks within the fintech space. And then my latest hat is I launched an early stage Canadian fintech focused venture fund called Exit North Ventures.
Love it. Congrats on the launch. Exciting time. And yeah, I've done some policy work with groups before. I think it's a super underappreciated leverage point for fintechs and folks in the space. Build an incredible network. You often find out what's happening in the industry in a way that's not getting reported in news outlets. So super useful groups to be part of for sure.
Yeah, totally. I mean, for so many fintechs, compliance is kind of a bit of an advantage, and it allows you to get to market quicker. And so through that experience, I got to meet with all of these emerging technology companies that at the time were super small, and now a lot of these guys are market leaders, and that's what kind of turned me on to the space.
Yep, love it. Maybe we could start out chatting about fintech in Canada from kind of a high level. Give me an overview of the Canadian fintech market. I'm anchored to U.S. market, but I'm kind of curious, what's the general state of fintech in Canada? What is bank sponsors, regulation, where are the big kind of product areas and all that kind of fun stuff?
Sure. So Canada is a little bit unique. We have a super concentrated banking system. So you have these 5 big banks that control 90+% of all financial assets in the country. Massive institutions. All 5 of those are in the top 12 across North America. And kind of everything within the fintech industry sort of revolves around that market dynamic. But that being said, despite that kind of oligopoly, you still have some massive international fintech brands that were built in Canada. Everyone obviously knows Shopify, but companies like Wave, which was acquired by H&R Block, Verifin, acquired for $2 billion by NASDAQ, Solium, acquired by Morgan Stanley, big international companies. Locally too, you have lots of non-bank domestic players. A good example would be in the lending space, you have companies like GoEasy. It's one of the largest non-bank consumer lenders, really similar to OneMain in the US. You have companies like Wealthsimple, which is really similar to Robinhood, has about $50 billion in assets under management. Companies like Coho and Neo, really similar to Chime in the US. So, lots of kind of similarities. From an infrastructure and policy perspective, Canada is also unique, sometimes not in the best way. In some ways, Canada is, you can say that we're a bit of a leader in certain areas. We adopted tap to pay and NFC chips like payment cards years ago. We've had an interbank kind of like pseudo P2P payment system for decades. That being said, a lot of our payment infrastructure is super old, and we're trying to update it for years with very, very little progress. And a big part of that is because of this market dynamic of having these really big banks that kind of own a lot of these infrastructure providers. And like my favorite crazy example of this is you have Interac, which is this interbank payment system between banks, and it's cooperatively owned by the banks. And recently, a couple of years ago, they received a federal mandate to build and implement Canada's new real-time payment system. So essentially, they've been asked by the government to create the system that disrupts their core business. And like, there's obviously no incentive for them to do that. That's just like a weird, crazy market dynamic that I think is like so emblematic of some of the issues that we face in Canada. Lots of other policy examples. We're years behind in areas like open banking and real-time payments. Like every year, there's another delay. A few bright areas. We've, in the last year, made some pretty big advancements around retail payments oversight, which just recently launched. It's basically how like all like GSPs are being regulated in Canada, and that's being overseen by the Bank of Canada. Some fintechs also have been approved to participate in the new real-time payment system, not just banks, which I mean, again, is immaterial if we don't have a real-time payment system, but it's it's a good signal. And then you mentioned sponsored banks. So that's also an interesting one. So in Canada, you have very, very few sponsor banks. Like depending on who you ask, it's like 3 to 6 maybe. And really it's just 2. Like you have People's Group, which is a massive, you would in the States kind of call them like a wholesale bank, like a B2B banking provider. And the DC Bank is another big partner bank.
Sure.
You have 2 middlewares. So Synctera, which is actually a Canadian based, or at least Canadian like originated company, and Neo Financial is another one kind of providing that like middle layer service for sponsor banks. There aren't too many wow examples of sponsor banking like fintech partnerships in Canada, but there are some really, really big ones in the retail space.
Okay.
So like what I mean by that, like retail being, so like PC Bank is owned by one of like the largest grocery stores in the country. And Rogers Bank is like, Rogers is one of the largest telco providers. And so they have a financial services arm, which is like a licensed bank. And Canadian Tire as well. It's like this massive home improvement like store chain in Canada also has a banking arm. And so you see a lot of these like co-branded card / like loyalty programs that in a way that is an example of innovations within sponsor banking. And then now you're starting to see come to the market some examples of kind of like that next generation of like retail bank partnerships. So Tim Hortons, which I'm sure some listeners are at least familiar with like the coffee chain. That's like one of our favorite Canadian retail brands. They recently launched like a true sponsor banking model in partnership with one of those middle layers financial. And they've launched cards and deposit services and different savings products through them.
Get your bank account with your coffee. I love it. So just kind of curious, you were talking about how there's kind of, a 5 whatever large mega banks, and is there any overlap between them and the sponsor banks? Like I'm thinking about in the US, a lot of the like fintech sponsor banks are they're like the kind of more like community type banks. They're not, it's like JP Morgan does like a little bit of stuff with fintech, but like really like a lot of the kind of up and coming fintechs, mid stage, even like late stage. Like I'm thinking about like Chime. Chime is not working necessarily with JP Morgan as their sponsor bank. They're working with kind of some more community banks. Is that like a similar dynamic then in Canada?
Yeah, for sure. I mean, like the reason for that in a dynamic in the US would be the same dynamic, in Canada, right? There isn't, if you directly own so many bank relationships, like directly with consumers, you don't really have so much of an incentive to like disintermediate yourself by enabling a potential competitor or potential like reputational liability to try to acquire more customer accounts. So the equivalent of like Cross River in Canada would be People's Group. They're providing a huge amount of like payment settlements for fintechs across the industry and like more traditional kind of like banking as a service type relationships. But those big 5 that I mentioned before, like don't really play in the space for the same reason that you just described.
Yeah, I like that framing too. I think folks, when you're in fintech and you're kind of oriented around fintech, it's easy to think like, oh, the company that I work at is like its own thing, but like actually the banks, like to use Chime as another example, like Chime thinks about itself as like Chime is a business, but like the banks they work with, Chime is like a marketing distribution arm, less
Mhm.
so like an independent company. So interesting
Totally.
frame.
And like, I mean, that's why, like I earlier I pointed to like these retail bank partnerships, because like that is amazing distribution. Like Canada's biggest airline, like Air Canada, doing tons of like co-branded cards. They have tons of like direct consumer relationships that are like super valuable for a bank to distribute through, as opposed to maybe like an emerging fintech that is like still trying to get to scale and still like going through all like the compliance, like trudging through the compliance mud to try to get to a point where they can actually be, legit distribution partners.
Yep. Yep. What about similarities between US and Canada, or any kind of top ones that come to mind for the fintech scene?
So I always joke that, the Canadian market and the US market is exactly the same. It's just the Canadian market is like 5 years behind. There is a grain of truth there from both like a product innovation perspective and also from a regulation perspective. And so
Hmm.
you can kind of see these like product regulation arcs that happened a little bit earlier in the US and then, inevitably were repeated in Canada.
Mm-hmm.
Like with like robo advisors, you had like Betterment and Wealthfront in the US pretty early. In Canada, like companies like Wealthsimple a little bit later, buy now, pay later as well. In the States, you had a lot of market penetration kind of pre-COVID, it ramped up. And then during COVID, you started to see regulators come down harder on the product. In Canada, that was all shifted a few years. And you're seeing the same trends with like digital mortgage companies, small business banking, fintech, spend management companies. Like you have like the US player and then like the Canadian player a few years a little bit later. And like there's some advantages to that, of course. As like a Canadian entrepreneur, it's so helpful to be able to go and see what's happening in the US and then say, okay, I can kind of predict the future a little bit and we can implement those solutions domestically. And for regulators too, it's helpful, right? They can go and spy potential issues that are happening south of the border. Right now I'm thinking like, like the consent orders against a lot of these sponsor banks in the US, and the regulators here can think, oh, well, as this market expands, maybe this is something that we should correct for early. Of course,
Yep.
there's a risk there that they like overcorrect for a market that
Right.
hasn't really developed. So we hope
Right.
that they don't do that, but there are also advantages.
No, that's an interesting point. Like I read these consent orders that come out in the US, and I very much think about it from like, are we making sure that we're keeping up with them, or the banks keeping up with them? But there's also this like international angle of like, oh, if you're a bank or a fintech in Canada, you can also look and say like, what are the best practices for AML programs and whatnot based on what the US is doing. So interesting point. Crossing a border with a product always seems like a lucrative, interesting option. And then sometimes you get in the weeds and it's maybe not so straightforward. So what is it like for a fintech to expand into Canada?
So I think there's some misconceptions about this. So Canada's, like I said, it's a fairly unique market. It's a big market, but it's not huge. There are about whatever, like 40 million people here. It's like basically the same population as California. But then like if you have, imagine like California was then split up into like 13 different provinces and territories, and you have 2 different official languages and like 2 separate systems of law, actually like 2 totally different systems of law. Plus all of the market dynamics that we just talked about with like huge amounts of bank concentration. You may think like, oh, okay, maybe I won't enter California. That seems confusing and tough to navigate. So the misconception there being a lot of international companies look at Canada, our stable economy, our stable financial system, our proximity to the US, and say, hey, like this is an awesome pit stop on the way to the US. And often that's fairly an unsuccessful approach to expand into Canada. And my favorite example of this is Revolut.
Yep.
So like Revolut, like famously came to Canada. They're like, wow, this country's banking sucks. They pay such high fees. We're going to shake things up. And they were unable, surprise, surprise, to receive a banking license domestically. And then in 2021, they packed up and they gave up. The opposite of that, in the same year, you had a firm acquire a local buy now, pay later called PayBright, which was kind of like the market leader in that space. And that was an incredibly successful way to enter the market. Affirm is now like by far the market leader within that space. And they've just, acquired local licenses and local expertise.
Yep.
I would say, to kind of caveat all that, the exception to the rule, obviously, like there needs to be an exception. And this is kind of a newer one. Alan, which is like a European health insurer, this year entered the Canadian market. And it's the first new Canadian carrier to be licensed in the country in, do you want to guess how long and how many years?
30 years?
Like a little bit more than 30 years. 70 years.
Huh.
Isn't that
Wow.
insane?
That's
Yeah.
crazy.
Yeah. So,
That's it.
yeah. I mean, so it's possible. But
It's interesting. I mean, I'm thinking about like in the US, we have like ILC bank charters, which like Square got one, and like we really haven't had many since that there was like an initial bump and then like kind of quieted back down again. Now there's I think some growing interest in it. So yeah, it's like who knows? Could be start of a trend, or could be kind of a one-off based on the fact that they're like a sophisticated existing business. But that's crazy.
Yeah. It's like really crazy.
What are some of the current Canadian fintech trends you're seeing?
I write about a lot. Like,
And folks should go subscribe. I've been reading the newsletter for a while.
Oh, thanks, man. Yeah, Canadian Fintech newsletter. So, I mean, my background's kind of, as I said, in the lending space. So I kind of have a little bit of a bias to pay a little bit closer attention to that industry. So one trend that I've been tracking in Canada for a little bit is sort of what I would describe as like the verticalized like integration of mortgage lending in Canada. So Canadians love mortgages. Like we have some of the highest like household debt in the developed world. About like 2 to 3-ish million mortgages are originated every year in Canada. And nearly half of that comes through the broker channel. So like if you're going to a brokerage and they're placing you with a specific lender. And kind of the way that a lot of newer lenders have entered the market in Canada is by first launching as a broker. If you're a broker first, you don't need as much capital. There are far less compliance requirements. You also, it's a great opportunity to like build a brand and build a platform without having to kind of take on those burdens. And then eventually you transition into like direct lending. And that's like Rate Hub and Nesto and Pine all did that very successfully. What those companies are now doing is going one level closer to the borrower. So they're all either acquiring or starting up their own real estate brokerages, which I think is cool.
Interesting.
So in the last year, you had Pine acquired a company called Properly, which is a real estate brokerage. Questrade acquired a company called Zolo, and RBC, which is like obviously one of the biggest banks in Canada, acquired a company called Ojo. And all of these businesses are very, very similar. And I guess what it's doing for the lender is getting them a little bit closer to a borrower before they even know that they need a mortgage. Like when they're just kind of like perusing different like houses on a listing site.
Right. That's fascinating. Yeah, kind of package the whole experience and be able to see the life cycle of somebody when they're starting to look versus when they've got the mortgage and are servicing it. Interesting.
Exactly. Yeah.
Yeah. I imagine the like, mortgage broker angle is interesting too. I imagine starting from that place, you have a lot of really good visibility into what that market looks like, what the rates are, like what dynamics behavior, user behavior and everything is. So smart strategy.
For sure. Yeah. Those are like the profit centers for most of the Canadian big banks. And it's like, even if you kind of go like one layer away from the banks, when you look at the mortgage market, you have this like class of originators and servicers called MFCs, mortgage finance companies, which is kind of their own designation in Canada. And basically they just pick up like servicing rights from other originators and then sell the actual assets to the bank. And then there's like 2 to 3 really big MFCs, and they're all partially owned by banks. So like, you have this kind of like oligopolistic dynamic in so many different areas of Canada. Like you and I'm sure we'll talk about this more, but like there's something about Canada that just kind of like sniffs out market leaders, I guess, like a winner takes all type environment. And so whether that's in like the mortgage industry or like in another niche credit segment, it's very common to have just 1 or 2 companies representing the lion's share of volume in a specific industry.
Interesting. Fun market dynamic. For the winners, it's fun.
Yeah, or like big opportunity for the fintechs as well, right?
Right. No, totally. In the coming, like, I don't know, 1 to 3 years, where do you see some of the big opportunities for Canadian fintech founders? I imagine this might be top of mind with the new fund.
Yeah, definitely. This is something we talk about very often with the fund. So maybe before I answer that, I'll tell you like a little bit more about kind of the reason why we created this fund in the first place. So through this newsletter that I write, I meet hundreds and hundreds of different fintech founders in the space, and there's definitely a lot of early stage capital going to those types of companies. And then at the same time, through that same network that we've built through the newsletter, I also have developed amazing relationships with much more mature exited founders as well. So this fund itself is kind of a combination of those two things. One, like amazing deal flow and distribution to like all like the top minds within financial services Canada, and also like leaning on the expertise of these amazing exited founders to diligent companies and to mentor them and to help find the next generation of exited or to drive the next generation of fintech exits in Canada. And so hence the name.
Yep.
Exit North. So in terms of some of the areas that we're looking at, you'd be so shocked to hear that like embedded finance is definitely like a burgeoning area of growth within Canada, and one that a lot of other investors are taking a look at. I guess like the kind of the history of the product suite in Canada is it's being very like retail focused up until now, and customers as they shop are very familiar with, although they wouldn't call it embedded finance, they're very comfortable with the concept of embedded finance. We talked about buy now, pay later, receiving like an embedded warranty or insurance product at checkout when you're buying something, maybe buying like travel disruption insurance when you're paying for a flight. And there are big Canadian fintechs for those specific niches. What we're starting to see now is kind of like going even more niche with some of these embedded fintech products. There's a company called Teal, which was recently or a few months ago acquired by Mercury, which is an embedded accounting platform. There's another cool one called OneVest, which is an embedded wealth management platform. You have the same thing happening for embedded loans, for embedded payroll. So there are kind of a few areas that I'm still waiting to or looking for players to emerge, but it's definitely like a really exciting area of innovation within Canada.
Yeah, makes sense. I think it's continue to be an area in the US for a while as well. There's a lot of niches you can go into with embedded finance still that are kind of untapped. So cool. Well, is there anything you've been thinking about a lot lately that you think folks in fintech aren't talking about enough? Could be Canada, could be general fintech, anything.
Yeah, I think what people love to think and talk about in Canada is sort of like the challenges that we face when trying to build big businesses here. And we talked about a lot of them, this bank competition dynamic, the lack of an open banking framework, very fragmented regulatory regimes across the country, not very many sponsor banks. But what I think people like don't talk about enough is why Canada is such an exciting place for fintech innovation right now. I mean, we have like really amazing technical talent. We have some of the best universities in the world, a really strong immigration system. We are sort of on the cusp of receiving regulatory clarity on a lot of these financial infrastructure elements. Also rates in Canada are coming down way faster than they are in the States. We have these like amazing tax incentive programs for engineering that takes place in Canada. It's the reason why, a lot of companies set up offices in Canada is to take advantage of that. And the obvious one is like we have a massive financial services market here. It's actually one of the largest ones in the world. And those, larger players are the folks who are providing liquidity for the rest of the industry. They are the, natural clients and acquirers of a lot of these fintech companies. So as someone who like writes about the industry a lot and now also is, an investor in the industry, I see Canada actually as one of the most exciting places to be building, in fintech in any market. And it's something that I don't think gets discussed too often.
Yeah, I love it. So some of your comments around like, a lot of Canadian founders can kind of look at the US for like playbooks of what's worked well there that we could build here. And obviously like each country kind of has its own idiosyncrasies and things that'll work vary from country to country. But yeah, exciting time for sure. Awesome, Tal. Well, this has been a great conversation. If folks want to get in touch with you or find out more about like subscribe to your newsletter, as all of our listeners should do, or check out the new fund, where should they go?
So you can find me on LinkedIn. I spend like way too much time on LinkedIn. You can subscribe to the newsletter. It's called Canadian Fintech Newsletter. So it should be kind of an easy name to remember. And then the venture fund is called Exit North Ventures.
Awesome. Well, thanks so much for coming on and helping teach me and our listeners about the fintech scene in Canada.
Thanks so much for having me.